All right, people, let's do a little breakdown to start the year off. So my first trade of the year came off the idea that we was potentially going to go bullish, mainly because we had filled out this wick right up in here, especially during the early day of the open for today as far as Monday. Or is it Tuesday? Yeah, it's fucking Tuesday. I'm tripping. Yeah, so Tuesday, market opened up finally, pushed up, went to a high, giving us an H for a high, right? But me, always looking left, seeing that price had already filled out this wick with that big push and giving us some area of potential support right here. So I zoned that off and I dropped down to the 30 minutes, see how that actually closed. And we was getting two major rejections. We got the first rejection right here when it touched that same area. But then when this started to close, I started to see the reason why up in here of saying, hey, if this is going to be a bullish engulfing on the 15 minute, I'm going to look for a reason in the next 30 minutes to get into a buying position. And my first original idea was that price was going to bounce from 1832.5 all the way up to 1837.5, giving us a 50 pip range, right? So price actually went as high as 75 pips. And let's jump to the next couple candles. So I'm sitting here and I'm thinking, like, all right, cool, that's a bullish engulfing. And then once this candle had dropped down and gave us that bearish rejection, saying it was going to go up, it dropped down, gave us really a bullish rejection, and I clipped it on its way up. So by me clipping it, I caught one idea of a bullish reaction in the market, potentially going up, hitting these two levels, either looking left, one right here, one right here. And I was like, shit. All right, either way, one of those areas got to get hit. Either this one got to get hit for about 30 pips, or this one got to get hit for about 55, 50, 50 something pips, right? And then I started to look, and I was like, all right, cool, 75. But then, on a higher time frame, the 30 minute, price fully reversed, went above, started to hit this level. So me, I started to reduce my risk. So I was like, all right, it's already inside that zone, looks real promising. So I reduced my risk to break even. Not only that, looking at the 1 hour time frame, I'm seeing that this is going to be a potential reversal as well as saying that it can keep going straight up, giving us an idea that it's going to be a 1 hour tweezer bottom, right? Because we're still in the bullish market. We're still going up, still going up. We've been going up for a while. But I was like, all right, cool. If this wick gave us a reason that price was going to reverse, and this supported it in this small area, that was the reason why I jumped into a buying position. So I dropped back down to the 15 and seeing potentially that was going to hold that bullish engulfing on the 15. I was like, all right, cool. We had that as a stop loss originally, but then pulled it up once we got in position and started to see price start to go in our favor. So price goes up, hit that same area, rejected a little bit, but then went up and continued. So now we at that same level that I was talking about, that 1837.5. I was looking at it, I was like, I was up about like $400. But then, yeah, it was like $450. And I was like, I'm gonna just let it ride. So I'm already at break even. I'm not pulling it up no more because I was like, yeah, that's a reason why I should hold it. Once this had bullishly engulfed it, all of this to the left, I was like, I'm gonna just let it ride and keep going. And then eventually, price had hit this level right here, this 1840 area, and rejected. But not only did it reject it the first time, but it came back the second time and rejected again. So I had took profit. That was my first trade for the day. But then I jumped in again, thinking that I was going to be good. I was like, I didn't like the risk that it was, so I got out. But by the time 9:30 came around or was approaching, I was seeing that rejection and I jumped in again for another buying opportunity. Because if you look on the 30-minute, it's breaking the high of that previous area of the 1840, right? Potentially going right here to this area of resistance right here. So I was like, I'm going to jump in because it was flowing perfectly the way I like, giving us a higher low situation. So originally I jumped in and I was like, where it reversed that, I was going to have a stop loss. It was only like 5-10 pips. So I jumped in based off the 5-minute chart, and we got all of this started to engulf pretty much this area, and this zone was being broken. So by that zone being broken, I jumped in at that 5-minute before 9:30 had approached. So I jumped in. I'm already in position. I was only risking about another $100 at max out of the profit that I made in the first trade, the 550. But then potentially going all the way up to the high of to what the date was basically. So today, damn, why that shit go automatically? All right, cool. That's fine with me. But price had jumped all the way back up to today's high during the opening of the stock market, which was at 9:30. Came back up, take profit got hit, and then price did what you can expect, reversed. So I'm already out at this time. I'm doing whatever I'm already doing, but you can see that price had went and did a what? Double top. Now I could have jumped in, but I was already done trading for the day. That was at 9:45. News had hit, and I'm already done. I made $1,000 as far as today, and I was happy with it. Simple, in and out, done for the day. It took about 2.5 hours total because I started at 7:30 just reading the charts. But once that was done, seeing the idea of what price was going to go or where it had to go as far as like the flow of breaking and retesting support and resistance zones, I was like, yeah, I'm going to take this trade. And that's all it's about every day, taking simple risk to rewards, good risk to rewards to get good trades. Originally, the first trade would have been about $200 of a loss if it would have just continuously dropped, because you see this big drop. But once you see the same thing over and over, you got to take those trades. Those same trades going to show every single time for a reason. Once you got the experience, you can see where to take your same trades over and over, where you can take your profit over and over, and potentially keep it running. Because that original trade could have kept running. I could have just held it at break even. But by me just saying, hey, it hit an area of resistance, take your profit. And that's what we got. We took profit. But then we had a continuation, a higher low situation, pushed up, hit our resistance, take profit. Now, what if I'd have held both of those trades? I'd have got smoked. I'd have got smoked. And that's what many people always fall into a trap of. They want to hold trades for so long, but you don't really need to hold trades that long. 15 minutes, 30 minutes, an hour, whatever it is. Whatever the market gives you for the day, take what they give you.